Happy Thursday. Inflation numbers here this week certainly came in pretty low, especially in the headline numbers. So we're going to break this apart quite a bit here this week. We also had consumer sentiment numbers come out last week that we're going to share some data around as well. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise along the way. And this week is certainly one to kind of pay close attention to here, because there definitely has been a lot surrounding the inflation numbers over the past 2 years or so, and certainly we're very much in the headlines here this past week. Before I get to inflation, I do want to touch on consumer sentiment numbers, which came out last Friday. So last Friday, consumer sentiment down pretty big versus, I guess, both expectations and prior month. I think a lot of this had to do with, just kind of how things, the tone of things lately. You heard the Fed kind of comment about slowing economic indicators and tightening credit and all that. And I think that had a big impact on this consumer sentiment number. However, with the numbers that we'll touch on here in a minute on inflation, who knows? It's very likely that number could bounce a little bit here in the coming month if things kind of continue. So let's talk a little bit about inflation. And for those who do listen weekly, we've been talking about inflation for a very, very long time. We've expected it to stick much longer than it has. The Fed, obviously, you may remember, used this word transitory all the time back in the early parts of this to suggest that it would go away quickly. And, here we are, 2 years later, and hopefully we're actually maybe starting to see some signs that it is coming down. And I would suggest the biggest factor of this is not necessarily interest rates, although that does play a role, but more so the money supply and how that has pulled back over the past, let's say this year, 2023. So Tuesday, we had CPI data come out, Consumer Price Index, and the CPI data was flat in October. Very surprising. This is the headline number, so this includes food and energy, right? Remember that includes some of the more volatile measures, but it was flat in October. And what this meant is actually year over year, CPI headline number is now only at 3.2%. So still high, still much higher than the 2% the Fed is targeting. So keep that in mind as we wrap up, but a big drop, right? Now, that said, core CPI, which takes out food and energy, and this is really the biggest measurement that the Fed at least suggests that they watch anyways. And I think it's fair because of the volatility around the other two. Core CPI was up 0.2%. So again, still up, down a little bit, up a little bit less than expected. But core CPI is still running at about 4% year over year. So a far cry from the 2% that the Fed is targeting there. On Wednesday, so just yesterday, we also had producer price index numbers come out, PPI. And this one was a shocker. So PPI came out at negative 0.5 for the headline number, right, in October for the month. Now that puts us at 1.3% year over year, again, for the headline number. And PPI, core PPI, so taking out, again, food and energy, was up, bear with me a minute, 0.1% for core. And so that puts us at about 2.9% year over year there. So it was a huge shift in the CPI and PPI headline numbers, no doubt about it. But remember that core still remained certainly a little bit less, but let's just say roughly in line with expectations. And so, we saw this huge, a lot of excitement around this, especially Tuesday in the markets and trading, basically with the understanding that maybe this means the Fed is done and inflation is tamed. And I do, believe that inflation is likely not going to be near where it was earlier parts of this year and into last. But I think that, this last bit still could be a little bit sticky as well. So hopefully we continue to see these drop. But remember, core CPI is still at 4%. The core PPI is still at 2.9%. The Fed talks time and time and time again that they need to get those numbers to 2%, not 4. That's a big shift, right? That's a far cry from 2 to 4, or 4 to 2, excuse me. Now, I do think the Fed tone shifts, so don't get me wrong. I'm not saying that this means that I think the Fed is going to hike next meeting, but I do think that if we're watching core data, this is certainly a sign that it may be coming down to some degree, but I still think we got a long ways to go till we get to that target. So we will see what kind of continues to unfold. Again, the money supply is the biggest thing I would suggest to watch moving forward to kind of get a finger on the pulse here. And that has dropped significantly. So, it is likely that we continue to see this inflation number pull back. It's just a matter of like how quickly from here it can actually decrease to get us to that 2% number that the Fed talks about time and time again. So we will obviously keep you up to date in our Thursday updates. Every time we get inflation data, we make sure to cover it because it is kind of the story right now, the Fed and inflation. So definitely stay tuned to our weekly updates for more information on that. But this week, we also had retail sales. Now, part of this could be inflation driven, but nonetheless, retail sales were actually down 0.1% for the month. So this was really interesting to see. Way too early to say, but there is some signs that maybe the consumer is starting to slow down a little bit, not a lot, a little bit. This could be, one of those signs basically. So we'll continue to keep an eye on that as well. We are not going to do a question of the week here this week because we have a free webinar that we're hosting this evening. So if you're not joining us already for that, feel free to let me know. I can send a registration link if you catch this in time. If you are, we'll see you at 5 p.m. tonight. Coming up next week, we've got the Fed meeting minutes. So that will be really interesting, especially with this inflation kind of news that we caught here this week. But that's all ahead of the Thanksgiving holidays. So we will certainly keep you posted next week, but have a great upcoming weekend gearing up for the Thanksgiving holiday, and we'll see you next Thursday.